Thinking that the market is going to crash nationally is a mindset problem. It makes them wonder, wait, what is really going on? Is this true? Are we heading into foreclosure territory? Because you and I lived 2008, 2009, 2010. One in every 45 homes was in foreclosure. That is a crazy number, man. We look at now, one in every almost 4,000 homes are in foreclosure. There's a massive difference.
If you're a first-time home buyer who's contemplating buying a house in 2026, or maybe even an existing homeowner who's thinking about listing their house for sale and moving on, you are thoroughly freaked out right now. There is so much confusion and misinformation out there right now that it's really kind of hard to put your finger down on what to expect, and it's causing a lot of people to be to feel paralyzed in what could arguably be considered the biggest financial decision that anybody's going to make. So this is a big topic of the day. There's a massive fear narrative that is rolling out there. It's primarily based on a lot of misinformation, like much to do of our lives today. And so we're here today to jump into that and to sort of try to persevere through that fear and provide some meaningful information and some forecasts on what 2026 might look like for you in regards to real estate. So with me today, I have got I've got my friend, a mentor. I don't know how to introduce this guy. I mean, he's a lot, but I'll tell you, Mr. Tristan Ahumada, who is my guest today to have this discussion. We could not be more privileged to have a better and more confident person to have this discussion with me. Tristan is the principal of Y Realty, one of the fastest growing and more important pivotal and evolving brokerages out there today. I just love what they're doing over there, but also a very dependable resource on what we're talking about today, which is what the hell is going on out there in real estate. In 2014, he started Lab Coat Agents, which is a Facebook group, which has now grown. Tristan, this is crazy. Like the largest Facebook group as it pertains to real estate in the world, with over 160,000 members and growing. So welcome, Tristan, and thank you for being here today, man.
I'm happy to be here, man. Thank you for having me, and hello to your audience.
I love it. Tristan and I were just talking before we got started. Like, there's no script, there's no nothing, right? We just, I was just basically saying hello and Merry Christmas to him. And I just told him every time we have an opportunity to link up like this, it just always exceeds my expectation on what comes out of it. So I'm just as excited as you might be to hear how this discussion goes. But, you know, the one thing that I wanted to focus in is this fear narrative out there, Tristan. You know, and I wanted to break it down into like three main categories. One is like home prices, right? Are they going to go up? Are they going to go down? Everybody is tending to think of real estate today like a day trading exercise, right? They're all trying to like hit it at the moment. But I want to talk about prices. I want to talk about affordability issues, interest rates, where's that's going. And then, of course, probably the biggest myth buster out there today, which is like, hey, man, I'm waiting for this massive foreclosure wave so I can buy one of these foreclosures off the banks. So that's what we're going to be talking about today. And at the end of this discussion, would love to provide our viewers with a tactical plan on if this is right for them. What are some of the best 2, 3, 4 takeaways that they can kind of armor up with as they pursue real estate homeownership for 2026. But Tristan, first question for you, man, is like this, you know, along this fear narrative, why is it so popular out there with people today?
Man, it's no different than any other time, really. The job of media is to find a narrative that brings the clicks and the views and brings people back through either some type of fear that creates anxiety. So you have to tune in to see what's happening next because it's going to blow up, it's going to destroy things, right? This is why we gravitate towards more negative news. Did you see the flood, Dave? Oh my God, did you see the earthquake? That was terrible, right? Stuff like that.
Well,
So
I get it, man. It's like media has honed in on the very reason why, traffic slows down when there's a big accident on the other side of the freeway, right? Just for the hopes that you might see a leg sticking out of a car door or something. I mean, it's that morbid attraction to news. And boy, the media has just put their finger on that Achilles heel, and they just put the pedal to the metal on that. Now, but I think I agree with you, right? We've always had this influence in our life, but it's different today, man. And I want to hone in on like this social media quote unquote expert. Now, I consider you to be a social media expert, brother. I consume your content. I listen to it. When I'm looking for answers, I will search out with you, right? Because I know you're credible. I know what your experience looks like. But how do you feel this world of social media entrepreneurs or influencers are they even qualified to give us these sort of like TikTok headlines? Talk about that, dude.
no, it's a tough situation because I've tested out both. And Dave and everybody else listening in, on social media, I've tested out that to press on the fear. And unfortunately, the algorithm does reward it, man.
Yeah.
I've gotten millions of views on those that I've tested out just to play into it. And then when I show up with real news, I get crickets or I get some views, right? But anytime I go to the extreme and I press on a narrative that twists the truth, all of a sudden it's like, oh my gosh, can you believe this? It gets shared. The algorithm loves it. It's normal because the algorithm, which is people, right? The algorithm of these social outlets love news that entices people to click on it. It makes them wonder, hey, what is really going on? Is this true? Are we heading into foreclosure territory? And I want to touch on that first, because if we compare 2008 to 2008, 9, 10, those 3 years to where we're at now, monthly filings of foreclosures in the United States, all right, were approximately, in the bad years, the Great Recession, approximately 300,000 a month. 300,000 a month. Right now, we're at about 35,000 a month.
What are you talking about, man? I just saw 4 times this morning that the sky was falling, like record foreclosure starts.
Yeah, I'll give you another number. This is the crazy number because you and I lived 2008, 2009, 2010. One in every 45 homes was in foreclosure. That is a crazy number, man, right?
Insane.
We look at now, one in every almost 4,000 homes are in foreclosure. There's a massive difference. Now, I'm not saying not to worry, because those people that purchased in areas like Florida, big parts of Florida, Texas, even in parts of Las Vegas and other parts here and there, when they purchased a home 2 years ago and now they're seeing a decline in value, of course you have to worry in those areas. But again, you come from a lending background. You understand that a lot of these people that came with 10, 15, 20% down, and they were overqualified to purchase a home. Even the FHA buyers, right, with a higher debt to income ratio, still were qualified. It wasn't like 100% financing coming in. Yes, we are going to have some people suffer through foreclosures, but again, going to that one in every 4,000 instead of one in every 45 in the worst of our time, it's not going to happen again. Because a lot of these people who own homes now, they're sitting on it. They're sitting on equity. They're pulling from equity to give to their kids or their grandkids to purchase homes, all cash in some cases. Because this is the other piece that most people miss. One in every 3 home sales all cash.
Ugh.
What?
That's staggering when you think about the like trillions of dollars of real estate exchange. That's the staggering number. Tristan, a wise man once told me that statistics don't lie, but liars use statistics, and I think that's what we're dealing with right now. Because there's been a jump of foreclosure starts for sure. And I'm a data guy, right? Like I'm constantly putting my finger on this. But if you look at foreclosure starts today, this is like RT data, like real-time data right now. We are still 30% below February of 2020, which is pre-pandemic. Right? Pre-pandemic, where was the message of, we weren't talking about foreclosures because they were so muted. And look, every day somebody's born, every day somebody dies, every day somebody loses a job, every day somebody has to unfortunately deal with the negative effect that can happen with like a financial calamity. But that's always going to be there. And for these, I see these headlines over and over and over again about, just wait. In fact, I cannot tell you, I probably have 25, 30 homeowners that came to us with this narrative of like, hey man, I want to get ready because I know this like onslaught of foreclosures are like just around the corner. So you wanted to go here first. Let's go here. So let's do a comparison for people, right? Because the last time we talk about 2008, a lot of people are getting whispers in their ears from parents or grandparents that lived through that time that maybe it didn't go so well. It was one of the biggest housing recessions we've ever seen in US history. But let's compare 2008 to 2026 or the end of 2025 and talk about what commonalities are there, and more importantly, what are the big differentiators?
Yeah, the commonalities is that it feels new to us again because you and I lived through this, but a big generation didn't. They only heard about it, right? Or were small, they don't remember it. The challenge is you have these social media influencers, and look, the world communicates on social media now. The most visited websites in the world are still Google, YouTube, Facebook, Instagram, ChatGPT, X, and Reddit. So when things blow up on social, they get shared a lot. And so when people say, yeah, foreclosures are growing, yes, they are growing in comparison to last year, but the point is they're still extremely low, like super low, right? And then they don't bring up the fact that a lot of these homes have a lot of equity in them. So when we're looking at this and saying, well, what's the biggest differentiator? It's like, well, there's a massive difference because back then, which I lived through, we were lending to people that weren't qualified to own a home. So of course, shit was going to hit the fan eventually, right? Now, if shit hits the fan, let's go through the worst case scenario here. If shit hits the fan, our economy tanks, our unemployment goes through the roof, right? All of a sudden, the world's in a terrible place in the United States. And we're in a situation where now people can't afford their homes. Well, what happens is a lot of these people that own homes, they can sell it and they can sell it at a discount. Right. And they still have no problem because now they can move on. In fact, most of these people can still move to some other home and pay all cash and they're still owed. Right.
So when I'm looking at like comparing point A to point B, I think it's important that you look at like the 3, 4, 5 years leading up to point A and the 3, 4, 5 years leading up to point B. And like, because I was in the business, and Tristan, you pointed out something that I hadn't even thought about. A lot of this information is coming from, I use this term lightly, but real estate professionals that are putting out these stark, forecasts on what is right around the corner. But the fact of the matter is, like, a lot of these people weren't practicing real estate. They don't have the tenure or experience. When you have two guys like you and I that have both been doing this for 2.5 decades and more, I mean, combined, bro, we're like over 50 years of real estate experience between the two of us, right? We lived through that. And in the period of 2004 up to 2028, that 4-year period was like unarguably the loosest, most irresponsible era of lending ever. I mean, we had loans, Tristan, where you could have been out of a bankruptcy discharge yesterday. And if we put a mirror in front of you, if it fogged up, dude, congratulations, you're approved. And not just approved for a loan, but approved for 100% financing, right? It was so crazy. Lenders just wanted to put paper on the street, like, right? We just wanted people living and breathing because everything was substantiated on the home, not the borrower. Now let's in contrast, look at every single real estate transaction for the most part since 2010, right? Like after we began the recovery.
Yep.
I
Yep.
mean, man, it's been the opposite lending environment. Dude, we drag people through the weeds. Show me this. Tristan, I need a letter of explanation on that. Why did your paycheck stub this week differ by $9 from what it was last week? I mean, people really, really, really have to validate their opinion, their ability to borrow. So when you're in 2008 and all these people were throwing their keys back to the bank, the difference is those people were never qualified to buy that home, Tristan, right? They were using this lending tool. I just hate saying it. They were using this lending tool that didn't rely on their ability to repay. So naturally, when the advantage, which was just ridiculous equity growth, went away, yeah, take the house back. What do you got to lose? Here, these are people that had to, in most cases, put money as a down payment. They validated their ability to repay through their job, through their debt management, through their credit history. So there's something to fight for now. And because of that, we're looking at a population, for the most part, of people who are sitting on 30-year fixed loans. So let's go back, like, prior to 2 years ago. I mean, everybody that was a homeowner practically refinanced during the COVID era into interest rates that started with a 2, 3, or 4. Dude, including myself, by the way, Tristan. So you would have to come to my home and pry my loan out of my cold, dead fingers before I give that up.
That's so
right.
funny.
It's just, it couldn't be more different. And I know a lot of my younger borrowers that are coming to the table, you know who the biggest whispers in their ear are that are providing this, oh, it's going to be a bubble, like the foreclosures are coming. It's their parents, dude. It's their parents, because they went through it. They didn't even really know what happened. So, hey, if it looks like a duck, smells like a duck, it's probably a duck. So they're coming from the right place to protect their kids. But at the end of the day, they're doing the opposite.
Yeah, that's so true, man. But then I want to take you through a route that a lot of people keep pushing, which is the narrative that there's another bubble coming. Okay. And I want to just show two different routes. One, bubble number two. If bubble number two did happen, Dave, where do you think it would happen from? Let's just go through the scenario. All right. Where would bubble number two happen? Bubble number one, people were already talking that it would happen. Those that raised a red flag, right? Saying, hey, we're giving out loans, everybody, to people that shouldn't have loans, right? And we're sticking them into REITs, and we're sticking them into the bond market, right? This whole world where we're selling them all together into other bigger companies and then offering them to the population to buy, right? Of course they're going to fail, right?
Yeah.
So people were already identifying that early on. What are the red flags that people are bringing up now? Let's go through them together, right?
Sure.
Let's go. Number one, they're saying that all of a sudden nobody's buying rentals anymore. Airbnb is going to crash us. That was like kind of hot last year, right? Not as much this year. Number two, they're saying that the foreclosures are coming. That one's easy to disprove, right? Number three, they're saying that the economy is going to tank because inflation's much higher than they're saying it is, and unemployment's going to rise, right? What else are we missing here?
Well, I get the affordability. I'm having that affordability discussion, Tristan, every single day of what I do. Rates are too high. Nobody's buying. So the $2 trillion of mortgage activity that we did in 2025. That's just, I guess, a couple trillion dollars of people who were uninformed. I don't know how to explain that.
Got it. So what we're seeing affordability is one of the main reasons that things are going to crash. So people can no longer afford to buy homes. So that means they're going to wait, and then prices are going to come down because nobody's buying them. So they have
Right.
to kind of match demand. Is that the biggest reason that you're seeing?
I would say that's primarily the biggest narrative that homeowners are bringing to me, that are coming in sort of preloaded with that idea.
Okay, I just asked ChatGPT, okay, just to play around. Number one, Airbnb, right? That I brought that up. Number two, affordability wall, income price to income ratio. So that number two. Number three, insurance, the death spiral, right, of insurance, it says. And number four, commercial real estate. Those are the biggest ones they see. This didn't even bring up foreclosures. Here's a problem with the affordability one. When we're watching it happen live, which is crazy, right? Affordability is happening in Florida and it's happening in Texas live so we can see it. How is it functioning? And we're seeing it accentuated because a lot of people during the pandemic moved to those two areas, to those states. And so now that they don't have the influx of people moving in like they did before, right, there's a problem. Prices aren't rising the same amount. That means the demand isn't there. On top of that, things got way too expensive for the people that were living there because they weren't afford to pay those prices. They weren't accustomed to pay those prices. They never were, right? This is why everybody was moving to Texas and Florida. Now that prices reached a point where it's unaffordable, they started coming down. And this year alone in Florida, in the area that declined the most was almost -9%. It's a lot, right? Year over year. But you look at areas like California, where we're already accustomed to this for years, right? We see places like San Francisco still going up. We see places like Silicon Valley still going up. We see places like San Diego and Los Angeles and even Ventura County, they're even. They're not going down because people are already accustomed to those prices. See, the jobs around here, they sustain those prices. In fact, we're bringing in people from other places like NYC, San Francisco, Seattle, Miami, international people that already know the prices are here. They're not going to be like, oh, the price, I just can't afford it. That's great. Go to Texas, go to Florida. See, the problem is people put their views on what's happening locally to what they hear nationally. And there are three markets. There's the market that's still going down and still going to continue to go down, Florida and Texas, because we're watching it, Vegas too, and other little parts. Then there's the areas that are still skyrocketing up, most of the Northeast, Connecticut, right? Boston, parts of Massachusetts, New Jersey, crazy, right? New York, San Francisco, Silicon Valley. And then you've got the middle, which is nothing's going to happen. 0%, 0.3% up, maybe 0.3% down, 1% up, average. Most of the United States is going to stay on average. But the news, the places that are like, oh my gosh, did you see Florida? It's still going. Did you see Austin? It's still going down.
Over and over.
Percent. And on top of that, here's the other piece that people miss. Well, on top of everybody else wanting to move to Florida and Texas, guess who else was building there? Builders. So builders, their number one job is to be profitable for their investors. And if they know that areas are still coming down, Florida and Texas, they have to get ahead of it. So what are they going to do? They're going to compete with the normal market and undercut and offer extra incentives for people to buy. So they're driving prices down a little further in those areas. They're actually doing a disservice for them. And once that runs out, then you're going to start seeing the market stabilize there. But until then, listen, you've got an insurance problem. You actually have a real affordability problem in those areas because people aren't accustomed to those high prices. You've got an overbuild in those areas where the majority of the United States, you're underbuilt because it takes 4 years plus from buying the land to building to getting everything approved and all that red tape. So, yeah, we have an
You know what?
affordability.
And by the way, like there's become almost this like myopic focus on is appreciation holding? Did things go down 1%? I know more, like you said, about the Florida real estate market than I do almost in my own community, because I am being infiltrated with data about it and headlines about it, right? And like I think there's this like new focus on real estate solely as like a short-term real estate mechanism, when like historically speaking, the legacy, the wealth, I mean, more people become millionaires in the United States of America through the vehicle of real estate by far. It's not becoming a social media expert. It's not being a startup company founder. It's through the vehicle of real estate home ownership. That stands true today, but that wealth is not made on year 1 through 3 or even year 1 through 5. Like real estate is a longer game, Tristan. Like people start exhibiting, that legacy growth, that income growth. Yeah, jump in on this, dude, because like nobody talks about this.
Sure. I'm going to interrupt you on this one because typically we look to these big companies. What are these big companies doing? Because they have a group of people, they have attorneys, they have systems, they have AI, they have algorithms running all of their back end on top of these MIT, Harvard, Stanford graduates running their systems to see where they should be looking to invest. And the one thing is very clear. They're investing in real estate heavily, but this is what they're doing. They're doing exactly what Dave said. Dave, you mentioned how you have to hold something for a long period of time. Well, they're going in and doing one of two things. They're buying areas to rent them out because they want to hold for a while. I'll explain to you why. And they're also saying, well, you know what? This area, like I'm going to pick your area, Dave, Temecula, or the area that you live in. This area has a lot of people moving into it. It's got great job opportunities, hospitals, close. The weather's amazing. Of course, people want to live there and build jobs for other people. Why don't we build brand new housing, but rent it to people, right? So you have two things going on. You have these massive companies like BlackRock and other ones buying up properties to rent them or building brand new construction to rent. Now, here's the thing. Here's the thing where they're smarter than most of us. They're holding on to them, not to sell them in the future, but to know that prices are going to go up on this stuff. And what are they going to do? Well, they're going to refinance, right? And they're going to now take some money and buy more, right? They're going to borrow more money on their own properties and start buying more and more and more and more, right? And then what do? Well, they're using your rental money to buy more properties and make their investors wealthy on your rental, on your rent that you're paying. And so I don't know about that, but shouldn't you be doing that? Like, shouldn't you be looking at this long term and saying, hey, if I can buy something right now and I can play the same game that these companies are playing, right? Whether it's your first rental property that you're going to buy or your first actual home that you're going to live in, pay down, and then buy another one, or sell and then buy two, or hey, why not buy a fourplex or a duplex? Why not, Dave, why don't you and I team up, first-time home buyers, and buy something together, right? Why are we renting together? Why don't we just go in and be like, let's make a contract, let's buy something together in 5 years or 7 if prices do continue to go up. Let's sell it, and then we can both buy our own home. This is how you have to start thinking.
That's how I got started, man. Right out of college, like day out of UCLA, me and my buddy bought a house in Anaheim Hills together, a small little condo. We lived in that condo together for 3.5 years. We sold it, we split the profits, and we each went our own way. And that started a beautiful and like illustrious relationship with real estate. And eight homes later, I'm now able to be in the home that me and my family want to be in. But there's no way I would have had an entry point into this home had I not had the 6 predecessors leading up to this home. And and you say, what, why don't we do it? Tristan, and that's the thing, people are doing that, right? But it's like this little silent thing that goes on. You don't see a lot of TikTokers talking about that. Like, it's just not a popular message today. And I'll tell you, that's what we're actually trying to do out here is dispel the myths, like, right, break through the reels and get into some real financial truth. Because I have people doing what just came out of your mouth today, or just a few minutes ago. They're doing that right now. They're taking advantage of the massive equity explosion that they've experienced over the last 4 to 5 years, and they are setting up a future legacy that will pay them back 20 years from now in the most magnificent way. You're not going to 401k yourself to that kind of success that you would have through the vehicle of long-term real estate ownership. It's just impossible.
All right, hold on. Hold your horses, dude. Check this out. All right? Because we live in a whole different time period than we did in 08, 9, 10, right? Even leading up, right? Homes are unaffordable. And I think everyone at this point, because ChatGPT is the 5th most visited website in the world, should be using ChatGPT to just kind of break down the basics and then go to like a professional like Medina, right? But if I ask them, hey, I can't afford a house right now, what are some options that I have? Because things are just so unaffordable. Well, number one, buy less house, right? Easy, or a condo. That's a simple one. Number two, use low down payment programs that your city or area offers that you may not know about, right? That's pretty cool that it told me that. Number three, buy with help, right? Whether it's family or like you did it, right? With a buddy or with a sibling, right? Next, buy a duplex, triplex, fourplex, or buy somewhere else first. Like if you really want to buy a home and you can, buy somewhere else, right? But that was just what it gave me. And check this out, because I want to just take this to another step, because we rely on all this stuff as consumers. Is the housing market going to crash in the US in 2026? What do you think its response was, Dave?
Oof, I don't. It depends. See, I am admittedly not all that well versed in AI, so I don't know where it's pulling that data from. But I'm hoping that it gives some strong evidence to support that's like almost an implausibility. But you tell me.
It says no. Most housing economists and major real estate forecasts do not expect a broad crash in the US market like what happened in '08. Current data suggests the market is moving towards a more balanced rather than a steep collapse. And then it gives examples and it gives links, not to TikTok videos or Instagram, everybody. It gives it to actual data so you can read it, right? That's important to me, because if AI, right, all AI, by the way, it wasn't just ChatGPT, Gemini, Claude, all across the board said the exact same thing. It says, no, we're reasonable based on everything we can pull. It's not going to crash. Like at some point, you got to look at the data and be like, am I reading this wrong because I'm listening to Joe on TikTok or some idiot on X or YouTube about the crash that's never going to happen? And then you're going to miss an opportunity to buy something because your area is actually doing well. And 5 to 10 years from now, you are now worth $300,000 more because you decided to buy now and not listen to the idiots out there. Yeah, it's time.
Dude, I love what you just said. And like, this is a perfect transition into rate specific discussion for a minute, because obviously the cost of money is hugely important as it pertains to buying a home. Like most people cannot buy a home unless they've got, a bank account to support it without, enlisting in a mortgage. So a lot of buyers right now are like, hey, I'm going to wait till the rates go lower, and that's going to be my time to jump in. And I take like a 50,000 mile overview of this, and as like a prospective buyer, the mind takes you to a place, well, okay, lower rates equals cheaper payment, which means opportunity for me. So I should just wait till that happens and then jump in. But Tristan, what, from a buyer's lens, Buyer's lens. In 2021, when interest rates were, I don't know, 3, right? 2.875. How advantageous was that for our home buyers, especially our first-time home buyers that were trying to secure real estate? Talk about it. You were a practitioner. So what did that look like for them?
I mean, I bought also on top of that. I bought during that time with the
So did
most amazing wind, right? So I not only lived it, I practiced it. And there were two challenges, that main challenges. Number one was that you had a lot of competition out there and it drove prices high. Now, in areas that we live in, right, California, it's it's been a benefit because prices, I mean, the house I bought, dude, is worth way more, incredibly more. And the rate allowed me to buy and pay such a lower payment than I would now. It'd be like astronomical now, right? So the challenge was I had a lot more competition. That's challenge number one. The other challenge, which we lived through with our buyers that we were helping, and now, by the way, with some sellers, they feel like maybe they were rushed into buying because there were like 20 offers on one property.
Oh, it's ferocious.
So they bought a home and they're like, I have a home and I have equity and I'm happy with that, Tristan. But I feel like I was rushed into it and I'm not 100% happy on here. What are our options? So those are the two biggest challenges, right? In our market. Now, you go to Texas, you go to Florida, you fast forward a little bit, 2023. Now they have a different problem. They're barely breaking even. Maybe their home is worth, they're underwater, right? That's a different challenge. So those are the things you have to watch out for there. But dude, now when you're purchasing now and you're putting 5, 10, 15% down, I tell my clients that we're working with, I'm like, first off, we send them over to someone like Dave right here at Medina, where he outlines what can I afford right now? Am I comfortable for the rest of the time I will be in this home, 15 plus years on a mortgage? And am I going to be able to be happy with the payment, right? Regardless of what happens. That's number one. And I don't think that people look at it that long term, because the first thing I hear all the time, this is where we start, first time home buyers, everything's unaffordable. I'm like, how do you think I felt when I bought my first home?
Yeah,
And
no kidding.
listen, I'm not fucking 80 years old here, dude. When I bought my first home, I was already older. So it was unaffordable to me. And yeah, I struggled a lot, but I got used to it and I worked for it. And guess what? Like, how did I become a millionaire first? Through real estate. No joke.
doubt.
Through real estate. That's how it happened, but damn, was it hard. It is scary. Like, it is beyond scary. It's like, am I gonna do this?
I want to take, Tristan, a first-time homebuyer timeout, because a lot of our audience, a lot of the people that I transact with daily, that I have the opportunity to kind of put in the driver's seat, are the first-time buyer or newer buyer. And back, we were referencing this era when interest rates were really, really low, unprecedented. And by the way, interest rates got really low, Tristan, during the COVID era, not because of good news, because of really, really, really shitty news from an economic standpoint, right? Like when rates go down, it's because the world's on fire, not the opposite. When rates go up, it's because people are spending, consumer price index is up, inflation is going up, people are willing to pay more for goods and services, which is the actual definition of inflation, right? It's not this big, complicated economic thing. It's like, hey, this costs $1 today, it costs $1.25 tomorrow, and I got enough money to pay for it, so hell, let's go, right? But I did business for our clients during that time period. And it was the most brutal. My God, I mean, we were successful sometimes, but you talk about being a first-time homebuyer, taking advantage of one of the most amazing California down payment assistance programs for a first-time homebuyer. You were competing with people that were putting $200,000, $300,000, $400,000 down payment. You didn't have a prayer of getting your offer accepted. Not at all. You had to waive appraisal. So if you, hey, tough shit, if the house doesn't appraise for what you're buying for it, you still have to buy it. By the way, Tristan, there could be a lot of stuff going on behind this wall over here, but you're never going to have a chance to see it because this is not contingent on you being able to actually come in here and do an inspection and ask me to repair stuff. Dude, it was brutal, bro. And I think a lot of people, and then they got caught up, like you said, in this, like, it was a panic buy. Right? It was a panic buy. And then when everything kind of settled, I think a lot of people looked around and was like, how did I even end up here? Right? Well, I ended up here because it was the only person that would accept my offer. So I look at the environment right now. Prices holding relatively steady, but sellers also willing. And I think the seller mindset is changing and needs to change a little bit more. That says, hey, look, if I'm Dave Medina and I need to sell my home because I have a job transfer, we had a new kid. Oh my God. I already got 3 already. I don't need any more kids. We got to move, Tristan. So I have to understand as a seller that I'm going to have to play ball and help these buyers out there with some of the biggest obstacles that they're facing with affordability, interest rates. So how can I do that as a seller? I can be open to participating in a solution that helps mitigate that issue. We have multiple buy down options, right? We can buy down the rate from a permanent standpoint. And we even have like these temporary buy down solutions, which just give prospective buyers runway, a year, 2 years, 3 years, where they sort of have this, like, it's still a fixed loan. It's not a subprime loan, brother. It's still a 30-year fixed loan, but you get your payment subsidized by the seller for a period of time to help you grow in, help, where this works really great is when we have like a husband and wife where the husband or wife is a year away, a year and a half away from becoming a nurse and making 6 figures. Like there's big financial like changes happening in their future. We can mitigate some of these big problems of affordability. And we're finally in a real estate market where we have a willing participant on the seller side. And we haven't had that, dude, for years, man.
That's very true. Very true, man. That's a really good point. And I think for those people that I talk to, because we get a lot of online leads. So conversations that we have, this is even before they're out looking at property, right? The number one thing I hear is it's not a good time to buy for me. And that's fine. I'm not going to push you if it's not a good time for you. But if we're having a conversation and you're telling me that the housing market is going to crash locally, right? And then I always go towards, and by the way, I don't disagree with anybody. I do my best to educate them in a kind way, right? So if Medina, if you're telling me, Tristan, the market's going to crash, I'm like, oh, all right, Medina, can you tell me what leading indicators you look at? Like, what's telling you that? I want to know because I want to look. I want to look for those, right? I want to look for those. And then they don't have an answer for that, right? Or they give me a generalized answer like foreclosures are up. I'm like, okay, what are they up to, right? And then we have this whole conversation, right? Because I have the numbers. Or they say, man, look, everybody's owing more on credit, because I hear that too, right? But are the credit standards loosening in lending, right? The answer is no, right? I mean,
Right.
dude, you do this. No, hell no. Tristan, inventory's rising dramatically. I'm like, well, where? Because if you're watching national news and you're telling me it's in Punta Gorda, Florida, where are you located? Are you in Punta Gorda, Florida? Right?
God, no.
And then price cuts, Tristan, price cuts. Every seller, every listing is having a price cut. Again, where is it happening? And where? Give me the area. And then once you give me the number, if it's local, wait a second. That's the exact same percentage almost every normal year during this time, right? So what about investors, Tristan? They're selling off everything. I'm like, again, where? Because all of these are leading indicators. Tristan, everyone's losing their job. Everyone? What's unemployment at? It's still really low,
Yeah.
right? And then again, locally. So leading indicators, what are they? What do you look for? And our best friend, Dave, our best friend, ChatGPT, Claude, Gemini, Perplexity, Grok, just ask, like, hey, what are the leading indicators that I need to look for if I'm going to buy a home because I'm scared of my market crashing? And then tell them where your market is. And then what data do they pull? Well, they typically pull from three places.
Yeah.
Don't pull from YouTube, Instagram, or all that shit. Don't do that. Pull from the data like Realtor.com data. Redfin data is not too bad. They're limited, but not too bad, right? And then they'll pull from Zillow data as well. Now it's about a month to a month and a half behind, but it still gives you a good idea. And this, now that you're like, okay, got it, I understand data, we're not crashing. Leading indicators, very important. That's when you get Medina involved because guess what? He has the experience and the creativity to make stuff happen that you normally won't find anywhere on AI.
Tristan, I hear what you're saying, and like it's just like this bell resonating in my head. We do not have a lack of data problem, right? There is a substantial amount of data to really reinforce to home buyers how real estate could absolutely be pertinent to their life right now. I mean, there's tons of data. The issue is not the data. It's that people will spend more time deciding where to take their wife for dinner on Saturday night than digging in and getting prepared for the biggest financial decision they're ever going to make in life. And our culture, from a media standpoint and from a consumption of news, supports that. It's support. We're headline baited. We already talked extensively about why these headlines, because these are people that monetize and get money on the clicks that people get. They're not practitioners of real estate. They're practitioners of headline stories because that's their job. I get it. Of course, they're going to go what gets them the most clicks. But at the end of the day, most of these people are completely unqualified to do it. And it's just unfortunate. I just read a statistic. I did chat GPT this. You'd be proud of me, Tristan, before we got on here today, that says in your main age buying years, 25 to 50, okay, right in there, over 53% of that population consumes their news from social media, okay? Now, the closer you skew to the lower end of that, in the high 20s, young 30s, our first-time home buyer market, Tristan, 74% of those prospective homeowners are going like this and making the decision on whether or not they should start the legacy of home ownership or not. And it is really, I mean, we're trying to come out here and be disruptors with that. I think the information we covered here today is super, super beneficial, but I want to do something. I want to get super tactical. So here's what I want to do, dude. I want to cover 6 like bullet point strategies that prospective homeowners in 2026 need to be armed with. Just quick, positive FAQs. So you go, I go, you go, I go, you go, I go. Okay, so you want to go first? All right.
I'll go first really quick because this is where it all starts, okay? Because I bought my first home and I struggled a lot, right? And I'll tell you, everyone listening in, first, second, third home, whatever, I don't care where you're at. Thinking that the market is going to crash nationally is a mindset problem. You need to start with your mindset first. Once you realize, wait a second, I may not know all the answers, that's where you start. Because then you start getting curious. And when you get curious, you start looking for a possible answer to home ownership. That's where it starts. I think number one, mindset.
I love that. I'm going to follow up with my first one, also parlaying on the whole mindset. And this is just, look, don't shoot the messenger, dude. It's not going to be a popular thing for me to say right now, Tristan, but home ownership is not for everyone. Sorry, said it, right? So it shouldn't matter to you that the person to your left couldn't get a home, or the person to your right couldn't afford a home, if you are not taking the time to have your specific and particular position financially and in life, both short-term and long-term goals, you are doing yourself the biggest disservice that you could ever do. So that's my one. You go.
I agree. Homeownership isn't for everybody. And I think number 3 is going to be, if homeownership is for you, and you're like, well, no, Dave, you're talking to the wrong crowd. I actually want to own a home. How can I do it? I think this is where you have to start getting very creative. If it's unaffordable for you right now, then it's okay for you to rent. How are you going to get there to that next stage? I would say, with all the knowledge we have right now at our fingertips, start outlining what are the possibilities that fit your reality. Is it that you're going to do it with family? Is it that you're going to do it with a friend, right? It's a little scarier with a friend, right? Or maybe it's a little scarier with family. Who knows, right? Uh, but is it going to be a duplex? Is it going to be a fourplex? Is it going to be that maybe you have to move out of your current city or even state if your job allows it, right?
Mm.
I don't know, but I think number 3 is, you've got to start doing some research. Start doing research, because there are so many opportunities, and some cities give you the money to put as your down payment. This is like,
That's right. That's right.
so that would be my number 3.
You know, I would accuse you of stealing from me, except you went first. So now I kind of feel like I'm stealing from you. But that was, so my number 4 was along that same line, Tristan. And I will sort of I'll say it as this way: runway is your best friend. Tristan, some of the biggest calamities and failures from a real estate acquisition standpoint have happened with this mentality of operating with this feeling of a gun to your head. We already talked about what that was like during the COVID environment, trying to buy a home. People were so in the fight. It was so emotional, so fast, so moving, and they weren't prepared. So it was just sign, sign, sign. Right. And all of a sudden there's a little bit of remorse potentially from some of that. So what do I mean by runway? If you don't know whether homeownership is right for you, that's okay. You're not supposed to know that on your own. Right. So runway is the time you have before you actually pull the trigger. Well, Dave, what's the best, most appropriate runway? Should we start 30 days before we want to buy? Should we start 2 months before? Should we start a year before? Should we start 2 years before? You know, my answer is yes. The longer the runway, the better, because it's not about just getting a home loan or securing your financing. It should be about optimization first. Things that we can work to create that strategic plan you talked about, right, Tristan? The research to do things, improve credit, mitigate debt. Right? Like there's I shouldn't say always, because I never like to speak in absolutes, but usually when we have ready and willing participants, Tristan, and we are not operating with, hey, my lease expires in 3 weeks, I need to be in a new home. Whether it takes us a year and a half, or 2 years, dude, I've been doing this for 25 years. I'm going to be here this year, and I'm going to be here 4 years from now. So I don't mind investing in people today for the proposition of them buying a home 2 to 3 years from now. And you should not work with any real estate professional, both on the real estate sales side or the mortgage lending side, that is not willing to meet you at that same spot.
I agree, man. I agree.
That's my point.
Listen, I'm going to leave you on this one because I have to jump off. But I think the 5th one, and I was thinking back and forth on this one. I think the 5th one needs to be something along the lines of making sure you're protecting who you listen to internally. So I would be more purposeful in choosing who you're listening to in the media, right? Because what you could do is you could listen to people like Dave Medina, and you could go to ChatGPT and say, hey, I heard this on Dave's show. Is this real? Right?
Bring it.
And then, dude, of course the facts are going to line up. And then you listen to some crazy ass person on X or YouTube. Google it and you're like, is this real in my area? And it'll be like, no, it's not. That person was crazy, right? So what you need to do is outline who you're going to follow and listen to that is looking out for your best interest locally. That would be my number 5, me.
You're so kind, dude, always. And as we wrap up here, Tristan, I'm going to close this out with the 6th tip for prospective homeowners, but it's not a tip. It's not a tip. It's actually an invitation. So in an effort, our team, in an effort to kind of weed through all this misinformation and mitigate against all these things we talked about here today, we created the Take Control. It's actually the 3rd version of it. So it's the Take Control 3.0 live webinar. We go live twice a month. Why does it have to be live? Because shit changes, right? So we're up there every single 2 weeks. And we are going through a strategic plan of how to armor up, right? If you're a soldier going out there to battle, you just don't go out there in your underwear, bro. You armor up. Home ownership should not be any different than that. You show up, you armor up, and you get out there. A wise man once told me that as well. Actually, a wise woman, one of my mentors in our industry. So we are here to armor people up. And the Take Control 3.0 workshop that we put together, in my experiences, and you can read the testimonials yourself, go to takecontrolre.com, or you can just DM me, message me, send me a fucking smoke signal. I don't care, man. We are here to engage and go belly to belly with people because our industry is in a race to do the opposite. So don't do what I said earlier. This is the biggest financial decision you're likely going to make in your life. You have to put in time. You have to put in work in order to be successful. And if you are successful, there has never been a better pathway to wealth than through the vehicle of real estate. And that ain't going to change. That's all I got, bro. That's all I got.
Put in time and effort. This is worth it. I love that. That's a great one.
Dude, I saw it on a fortune cookie last night when we were having
using it.
I love it. Well, Tristan, listen, man, thank you, dude. I know you're so busy. It's the day after Christmas, man, and you showed up here. You're just one of my tribe, man. I can always count on you to show up. I appreciate your mentorship, dude. I appreciate your expertise, and thank you for your time today. This was incredibly beneficial to me, and I'm sure everybody who listened in.